So let's talk about Tesla. And of course, you can't talk about Tesla without talking about the enigma that is Elon Musk. But I want to separate the business of Tesla from the cultish following that has formed around Elon Musk and everything he touches, whether that be SpaceX, SolarCity, or the side projects like the Hyperloop, or his most recent proposal of underground tunnels for improving traffic conditions. Now, don't get me wrong, I'm a bit of a fanboy of Musk's. I love the Tesla cars. I was initially excited about the Hyperloop until Thunderfoot exposed the numerous flaws in that idea. But I do believe that Musk is a visionary, in the mould of a Steve Jobs, if you like. And I'm glad there are people like Elon Musk out there dreaming up new ways to improve people's lives. But my basic thesis in this video is that investors have too many expectations built into the valuation of the Tesla company. So let's get the formalities out of the way. I'm not a financial advisor. This should not be taken as investment advice. I'm doing this because I have a genuine interest in business and investing, and I know some of you do too. So this is Jim Chanos. Jim Chanos is a renowned short seller who was famous for correctly calling out the demise of Enron. Maybe lesser known is the fact that he made his name calling the downfall of Baldwin United in the early 80s, which at the time was the biggest bankruptcy in US history. He definitely has a nose for funny business when it comes to corporate malfeasance or just companies that don't live up to the hype. So when Chanos started making noises about Tesla in late 2015, I started listening.
You and some like-minded tech analysts were down on Tesla. Walk us through, is this simply because you think this is an overvalued battery company?
Well, I think first of all, it's an overpriced car company. And one of the more interesting things about Tesla is now comparing it to other car companies. And in September, we think that BMW, which is a little company in Germany, sold just about as many electric cars in the U.S. as Tesla did, about 2,000. And in fact, BMW, there are press reports that BMW is claiming that almost their entire fleet will be electric by 2025. Well, of course. So what Tesla had as an innovation and a head start in this market, other companies are now catching up to. And they have to become a car manufacturer. And becoming a car manufacturer is a lot more difficult than becoming a high-tech darling. And that's the reality here, is that returns are relatively low in the car business. It's very capital intensive. You need huge networks. And all these things, when you're selling 50,000 cars a year, they're all sort of bells and whistles. When you're going to sell 500,000 to 2 million a year, they're essential.
And I think that's a very important point. Tesla is often mentioned in the same breath as companies like Amazon or Netflix as some kind of tech marvel, but it isn't. It's a car company. And as we'll see later, it's also now a solar panel company. But making cars is a capital-intensive business. Amazon and Netflix are not.
But I always wondered whether really the play here is for them to build up a pretty good IP, patented protection,
right, and
then sell it to Ford or GM or somebody that needs to get into the electric business.
Except that the problem is most of their technology is other people's. The battery technology is Panasonic's. And you know, all you have to do is read their 10K to find that out. And so, again, they've sold the sizzle here and not the steak. And if you look at Tesla's market cap, it's about half BMW's. But BMW sells 2 million cars a year, and Tesla sells 50,000.
So remember, this interview took place about October 2015, and today Tesla has a market cap of 52.4 billion, whilst BMW's market cap is about 63 billion. And Tesla sold just 76,000 cars in 2016, whilst BMW sold just shy of 2.4 million. Now they're going to segue into talking about SolarCity, which at the time was a separate company, but since late last year was acquired by Tesla. So it's relevant to the overall picture of Tesla today.
We learned in August you were short SolarCity.
We are short SolarCity.
Then let's just talk about Elon Musk. Is it Elon Musk that you're short?
No, I think Elon Musk is certainly, his name has added something to the valuation of both those companies. But at the end of the day, as we talked about earlier on Glencore, it's not about personalities, it's about the business model. And SolarCity, we joke, is akin to that old movie Tin Men with Danny DeVito. They're selling aluminum siding door to door. I mean, SolarCity is basically leasing you solar panels if you're a residential customer, at what we think is an uneconomic deal.
Okay, but that doesn't make them subprime. You've compared this to a subprime finance company.
Yes.
The subprime market is a lot different than guys knocking door to door saying, "Can I sell you a solar panel?"
Well, not really, because
Why?
at the end of the day, they're taking credit. They're taking consumers' credit.
And they're long-term deals, right?
They're 20-year deals.
Yeah.
And the deal is dependent for SolarCity on the back end. And that's the interesting part. In addition, SolarCity finances itself. Its bonds yield around 8%. And that is certainly junk credit. So they have a portfolio that we think is yielding about 7% on the leases. And they're financing themselves at rates higher than that.
But is this specific to SolarCity, or are you there with green tech more generally? Because there's a lot of talk about green tech, including in China with investments in green tech as growth.
We're bullish on installation of solar. We think that's just going to continue, and costs are going to come down. All the more reason to be bearish on the residential installers, because again, they're selling you power in SolarCity's case, it's 17 cents a kilowatt hour. The average power bill in the United States residentially is 12.8 cents, and it hasn't grown. And so they've got to get that rate down. Solar is slightly more competitive than the utilities in California for SolarCity, but it's not cheaper than other solar providers, and that's the crux. Other solar providers can get it to you cheaper than residentially leasing it from SolarCity.
So SolarCity makes returns of 7% whilst financing itself at 8% and is relatively more expensive on the price of electricity. Doesn't sound like a great business, does it? But it didn't stop Tesla acquiring it a little over a year later. So let's jump forward to the Iris-Zone conference in May last year and hear what Mr. Chanos had to say there.
One of our historical signposts of a company in trouble is when numbers of senior people leave over a short period of time. Tesla fits that bill. We have a chart that we've had, I guess we're going to have to update it this afternoon, of senior executives leaving Tesla. It is a flood of people leaving in the past few years. And that is not a good sign. And this is not just the Model X. These production people are going to be needed for the Model 3, which is the real story.
So, but this is not this sort of exodus of talent, as you say, is not the core to your thesis. You have questions.
No, we have all kinds of questions on the profitability of the business. If you're losing money selling a $120,000 car, you're not going to be making any selling a $35,000 car. And the problem with the Tesla story, a little bit like Cheniere, to tie in all the loose ends, is that it's based on these 2020 to 2025, projections on selling 500,000 cars. This is a company that can't forecast its deliveries 1 quarter out. And yet everybody's confident about what they're going to make in 2020 or 2025.
And this is a common problem that I know of from personal experience, having made overly optimistic assumptions as an analyst, as well as having faith in them as an investor. Now remember, I mentioned Tesla sold 76,000 vehicles in 2016. That's expected to jump up to 500,000 by 2018, largely on the back of the ramp up of the Model 3 later this year, which already has 400,000 pre-orders for the dubious price of $35,000. But here's the thing, Tesla's track record of delivering on its promises is abysmal. Here's a few examples. September 2007. We'll build 650 Roadsters in 2008. They built just 140. July 2012. Production on plan for 2012 goal of 5,000 deliveries. Tesla delivers 2,952 vehicles in 2012. November 2013. Model X deliveries would take place at the end of 2014. Initial deliveries started in September 2015. March 2014, Tesla promises deliveries at 100,000 annual rate by the end of 2015, and as I said, they delivered just 76,000 by the end of 2016. Doesn't inspire a lot of confidence. And how about SolarCity 6 months on?
SolarCity, that is incredibly interesting. If you think about in 2015, the installation soared up 70%, but yet the cash flow, I think it was $700 million out the door. Now they announced
$600 a quarter.
Okay, so you're right. And now they announced a deal with John Hancock, I think $225 million.
Yeah.
Does that solve the problem?
To sell assets, and
Right.
they're doing so at a discount rate above the return on the leases, so that actually destroys value. And that's the problem. In the last quarter, SolarCity had lease revenues of $75 million. If we assume no expenses, one person at headquarters to basically take the lease payments to the bank, no depreciation, no interest, whatever, they have $6 billion of capital employed in the business. $300 million divided by 6 billion is a 5% return on the solar leases. We think that John Hancock was using something like an 8% discount rate. So the problem with SolarCity is they're losing money on every installation and making it up on volume. And that's a problem when you have a levered balance sheet. I think SolarCity gets into financial trouble in 2016.
And that was very prescient, of course, as SolarCity was rescued by Tesla's takeover later in the year.
Let me get back to the Tesla thing. Yep. There are a lot of naysayers out there. People have loved to come dump on this stock and dump on the story. 400,000 Model 3
There's a lot
pre-orders.
of true believers, too.
There are. You don't put any credence into, 400,000 orders. This is like a cult following that follows this company. People who are true believers, in your words, who think that this company is going to be everything that they want it to be, and they're willing to pay up now for that kind of growth.
Well, they're willing to put a deposit down that's fully refundable, let's be clear. And so you don't hear much about the Powerwall from a year ago. Remember all the deposits that came in for that? Well, they've quietly scrapped one of them, and the other one's not economic. You don't hear much about the Gigafactory anymore, do you? $5 billion project in Nevada. That's because battery technology has already leapfrogged the type of batteries that are going to be made in the Gigafactory. So Musk doesn't talk about that anymore. And that's, at the end of the day, he's always moving your attention to something else that's out there and hoping you'll forget to look at what he talked about a year ago.
And I think that's a very important part of the cult-like mentality around Elon Musk and the Tesla company. He makes grandiose forecasts, and then when they don't come to fruition, he's off on another project, the Hyperloop, the Powerwall, the Gigafactory, roof tiles that are now solar panels, whatever. People keep buying into the vision without checking on the previous forecasts. So now let's skip forward to September last year when Tesla announced that they would be buying SolarCity.
Were you surprised when you heard the news of the transaction?
When we talked to you at Irisone, we realized that SolarCity was running out of options quickly. That if nothing happened, they were going to hit the wall financially by the end of the year. So we never dreamed that Tesla would buy them outright. We figured they would make loans, or SpaceX would make more loans. But we never dreamed, from a corporate governance point of view, that Musk would try to get his shareholders to approve that. It may not happen, by the way.
And it only sounds like it emboldened your view, negative on both.
We're still short the securities of both companies, and if they do buy SolarCity, we'll just be short more Tesla. We pointed out in our comments today that if you look at a credit related score like the Z-score, Tesla's put itself into the walking insolvents by doing this deal. So I would assume the market would cheer if they walked away from it. But he seems pretty committed to try to get it done.
You think Tesla needs to raise more capital?
Absolutely. They'll have to raise capital by the very end of this year, early next year. A lot.
Well, against most people's better judgment, they did buy it. And in March, they announced they'd be raising more than $1 billion and subsequently finished the quarter ended March 2017 with a whopping $4 billion in cash. But also remember, post the SolarCity acquisition, the company has more than $7 billion in debt. And Musk says that Tesla intends to spend $2 to $2.5 billion before production of the Model S starts in July. Now, if you go back 18 months ago, there were forecasts that Tesla could earn $20 a share by 2020, and that would make today's price look reasonable. However, the latest figure I could find off NASDAQ was just under $10 a share, and that's been coming down steadily over the past 18 months. Also, Evercore, that was paid $7 million for writing the fairness opinion for the SolarCity acquisition, used forecasts from Goldman Sachs, which at the time had Tesla earning over $1 a share in 2017 and over $4 in 2018. Now, Goldman has since slashed its forecast to a loss of $2.50 in 2017 and a slightly more positive 69 cents in 2018. Now, anytime you see consistent downgrades to earnings forecasts, this is not a good trend. So I'm going to go out on a not so bold limb here and say I'd be surprised if Tesla makes any money by 2020. Now, on top of that, things for SolarCity seem to go from bad to worse. A story out last week showed SolarCity posted its lowest number of installations in 2 years, and the cost of installation fell 29% in the final quarter of 2016 from a year earlier, further squeezing margins. Now, what about competition? Well, let's listen to Jim Chanos again.
So if you look at the competitive landscape, forget about the financial now with Tesla. You've got Mercedes coming out with full line. You've got BMW coming out full line. I was talking to another manager today about the Volt on the lower end, extending their range, remarkable levels. When do we see that really starting to hit?
And the other problem, Steve, is that the Model 3, as people think it will be configured, will never be 35,000.
Right.
It, like a lot of other Tesla models, they come out with a price, and the real effective price is 25 to 50% higher. So the Model 3, as most people would configure it, I think is going to be a $45,000 or $50,000 car. And again, that's a big difference in the mass market from a $35,000 car.
So it seems where Tesla had a first mover advantage, that's no longer the case as competition heats up in the electric vehicle space. And if the Model 3 costs closer to $50,000 rather than $35,000, that means it'll price a lot of people out of the market that thought they might be able to afford a Tesla. Now, you may have noticed during that last clip, which goes back to September last year, that at the time the price of Tesla was $195 a share. Today, it's at record highs, closing at $325 a share on May 10th. So clearly, there's still a lot of belief in Elon Musk as some type of guru that can defy the odds. Now, a lot of people would say that makes Jim Chanos wrong. Even if he's right, he's early. And early is the same as being wrong on Wall Street. But that comes with the territory of being a short seller. It takes an enormous amount of patience and discipline. And that's why there's not very many of them. And Jim Chanos has been doing it successfully for more than 30 years. So to echo Chanos' words of wisdom, don't be distracted by the sizzle, concentrate on the steak, something that Tesla appears to be in short supply of at the present time. So is Tesla the real deal, or is this just a case of a cult of personality? Let me know your thoughts in the comments below. See you next time.